What is up, Bat family? Welcome back to the Builder Trader YouTube channel. If you're new here, go ahead and hit that like and subscribe button. In this video, we'll be going over the weekly economic news for the upcoming trading week, as well as some technical analysis on the trading pairs that we cover. This week, those pairs include the NASDAQ 100, S&P 500, US 30, gold, silver, as well as taking a quick look at Bitcoin. Hope you all had a great week last week. There was lots of trading opportunities present, lots of volatility as well. Right now is a great time to be a day trader. Overall, there is a lot of uncertainty in the markets, but that does not mean you cannot make money during times like this. These time periods provide tons of opportunities to be able to capitalize on and profit from. It's just about being prepared and looking for the next move, seeing the next step, and making a plan and executing that plan. Without further ado, let's go ahead and dive into the upcoming news for this trading week. Alrighty, starting off the trading week on Sunday, 4/20, April 20th, we have 1-year and 5-year loan prime rates for the Chinese yuan. Monday, no news whatsoever. That's going to be an interesting trading day. Tuesday, we have medium impact news for the euro and the US dollar. We have the European Central Bank President Lagarde speaking, as well as Richmond Manufacturing Index. The Richmond Manufacturing Index appears to be a survey given to about 75 manufacturers in the Richmond area. Interesting. Alrighty, next Wednesday, during London session, 12:15 a.m., we have high impact news for the euro, which is French Flash Services Purchasing Managers Index. 15 minutes after that, we have high impact news for the euro again, German Flash Manufacturing Services Purchasing Managers Index. 30 minutes later, 1 a.m., medium impact news for the euro, again, Flash Services Purchasing Managers Index. So we have medium and high impact news for all of these European countries in a 45-minute period. Following that, we have high impact news for the GBP, Great British Pound Flash Services PMI. So London session, lots of high impact news for France, Germany, Europe, and Great Britain. During New York session, 6:35 a.m., we have FOMC member Waller speaking. 10 minutes later, we have Flash Manufacturing Services PMI for the US dollar. So it looks like this is just Flash Manufacturing Services PMI day. Shortly after that, we have new home sales for the US dollar, and later that morning, 10:15 a.m., Bank of England Governor Bailey speaks. Thursday, 1 a.m., 1 hour into London session, medium impact news for the euro, German IFO business climate. Pre-New York Open, 5:30 a.m., we have high impact news for the US dollar, unemployment claims, core durable good orders, 5:30 a.m. for the US dollar. For pre-New York Open, 5:30 a.m., we have high impact news for the US dollar, unemployment claims, followed by durable goods orders, core durable goods orders. 7 a.m., medium impact news for the US dollar, existing home sales. Later that afternoon, during Asia session, we have Tokyo core CPI for the Japanese yen. And then pre-London Open, 11 p.m., we have retail sales, high impact news for the Great British Pound. 1 hour into London Open, 1 a.m. on Friday morning, we have high impact news for the Swiss franc. We have Swiss National Bank Chairman Schlegel speaking. 5:30 a.m. pre-New York Open, we have high impact news for the Canadian dollar, which is core retail sales and retail sales. Shortly after that, we have medium impact news for the US dollar, which is revised University of Michigan sentiment. Overall, this is going to be a great way to end, or close to the end of the trading month. There's lots of news, going to be lots of opportunities. After this week is basically a new month. In the middle of next week is a new trading month. So there's a little bit more news next week, but overall, this is how we're going to end the month. Should provide lots of opportunities and ultimately give us the volatility we need to be able to capitalize on our trading pairs. Alrighty, let's go ahead and dive into our technical analysis on our first trading pair, which is going to be gold. As you can see here, gold last week has followed our analysis perfectly and is still climbing higher, targeting the $3,500 price range that we have originally set up here. We need to adjust our technicals as gold made a new all-time high last week, breaking 3,300. It actually hit a high of 3,350. $33.57 and 88 cents was the high last week. Absolutely insane. Gold is not stopping for anyone. This train is just continuously going. So we can see here, this was the setup we were looking at last week. It ultimately came down, broke a little below 3,200, and then rejected and was able to create support here and continue higher, creating a nearly $200 move or $150 move, $160 move. Either way, a massive trade opportunity there. That'd be 1,600 pips for those wondering, 1,600 pips. So let's go ahead and remove these risk to reward tools and update our technicals here. So we have some resistance right here. Let's zoom in a little bit on the right hand side. Oh, actually, let's update our previous week's low. Bring this up right here because this is the low of last week. So now let's zoom in. Daily time frame on the right hand side, left hand side going down to the 4 hour. We have an area of demand right down here, / support. Going to zoom in a little further onto the 2 hour time frame to see some more details. And yeah, ultimately this just looks like it's going to keep climbing higher. There is potential for a correction if we can't sustain this bullish momentum. A move down to 32.50, then retest and continue higher, targeting the previous week's high, and then going up to potentially 3,500 price range. We could see a move down if we fail to break above this area here, and then a move higher, or price is just bullish and we just keep pushing and not stopping. We'll have to see how this candle opens. The market opens in about an hour and 50 minutes, an hour and 49 minutes. So we'll have to see what happens then. But ultimately, bullish, targeting 3,500. We may get a pullback down to 3,250 price range. So the setups I'm seeing would be this here. First take profit area would be the all-time high, previous week's high, and then up to 3,500 price range. The other area for a potential buy opportunity would be right up here. Price currently is. Stop loss below the previous week's low, or not previous week's low, but this low here at 32.80, right below this wick. And we could just see a strong bullish momentum targeting this high here. If we break above, should be clean bullish volume. So similar to last week, kind of how it moved last week. As you can see, just strong bullish volume all the way up, breaking 3,200, and ultimately we should see something similar with just similar price action. So that's what I would anticipate for gold. These two setups here, we have an alert down at 32.70 in the event gold does start pushing towards 32.50, and we have an alert at 3,500 to let us know that price has reached our overall projection area. That's all I have for gold. Ultimately bullish and looking for buys. Next pair, silver. Now silver has recovered a little bit last week, as we can see here. So the previous week's high will be right at this area here. Left hand side will go to the daily time frame so we can actually see what we're marking up. There was way too many details down on the 30-minute time frame. Previous week's low will now be right up here. Oh. Silver looks like it's going to keep climbing higher. We can see that price came down and ultimately created bullish structure, held support here, and looking to make another move up. So let's zoom into the daily time frame, or actually 12-hour time frame on the right. Left hand side, we're on the 4 hour. Ultimately, it's just going to look like we're going to open with a bullish candle, targeting the previous week's high at $33, $33.15, and then push higher up to $34 and $35 price range. This looks clear as day. There is high probability of it going higher. The setup that one could take and that I'd be seeing would be this here. If you target just 34 from this price range, it's 2.5 risk to reward trade. If you target $35, which is the overall price point we have been seeing for a few weeks now, maybe even for over a month. We had a lot of different scenarios play out here. We can see it pushed up, came down, retested this major area, almost broke its all-time high, but came down to take liquidity down at this major point at $28 a few weeks back at the beginning of the month. So now we can see we recovered, and ultimately the overall higher time frame bullish trend is looking to be fulfilled once again here. So $35 is appearing to be on the books, especially if we move bearish this week, or especially if we move bullish this week. One could also potentially buy on the break of $33 and just catch momentum from 33 up to 34 and take that setup. Could still be over a 1.5 risk reward trade if you have a stop loss $32.50 and take profit $34 and you buy at 33. This to me is a pretty good setup. Very clean momentum trade if this does end up playing out. And if you were to buy right at the open, if in the event price doesn't gap higher, then you could also ride this up to 34, 35 price range with a higher risk to reward. Overall, silver bullish, looking to target $34 and potentially $35. Next, we're going to be looking at the NASDAQ 100. This pair has been real interesting. Last week didn't do too much. We were consolidating in a range, as we can see here on the left-hand side on the 4-hour time frame. Right-hand side, we're on the weekly and updating our previous week's low. Now let's zoom into the daily time frame. Let's remove these risk to reward tools. As you can see, if one were to have taken these setups last week, well, they'd still be open. You wouldn't have been stopped out. You may have been in a small profit, but ultimately didn't go to the areas we're looking at, which is 20,000. I still think 20,000 is looking to play out. If we look at this major level of support here, right at the 18,200, 18,000 price range, where price has been playing off from, it's looking likely that this could potentially hold. We can see this 12-hour time frame try to break the previous low, but didn't. We could see some rejection here, and then a bullish candle, then some rejection on this area, on that candle. This to me looks like it is setting up for a bullish move. Next move is what I'm seeing here. Just like this. Stop loss below these lows here, targeting previous week's high, and then potentially up to 20,000. So this is a pretty good risk to reward trade here. Now there is a chance that price could gap lower on the market open here in about an hour and 40 minutes. That'd be the only risk in my opinion with this trade. So depending what happens, depending how we open, if we hold in this area, this could be a good area to buy and let this play out. In the event that price does gap lower like we did a few weeks back, just open bearish, there is this area down here price could potentially hit, which is the 17,400 price range. I don't think we'll be going down there, but it is there and it is possible. But ultimately, I do see price just moving higher this week, potentially breaking the previous week's high and targeting 20,000 as we were seeing last week. I think we'll break out of this consolidation, out of this range here, and start trending bullish. Next pair, we're looking at the US 30. Same thing for the US 30. We can see a lot of consolidation last week. You can see our previous week's low is right here. Let's update that. We were just playing in this range. If you would have taken this setup from last week, you wouldn't have been stopped out. You would have been in small profit and then ultimately be in some drawdown now. It's just in a range here. We need to be able to break out of the range and start trending bullish. It is possible we may see that based on the previous week's candle. Although it did close bearish, it didn't create any type of engulfing candle and is also showing rejection from this area of support, which is also a potential retest of previous structure. So there's some good confluence here from previous technicals as well as the current price action, indicating that we could see a move higher up to where we were looking at last week, which is the 42,000 price range for the Dow Jones US 30. This would be the setup I'm seeing here. Stop loss below these wicks here on the left hand side. There's a lot of liquidity here, so I could see maybe if price were to gap lower on the open, similar to the nasdaq, gap lower, maybe take liquidity, and then if you saw it react like that, this could be a good opportunity to potentially take a buy setup. Then targeting the previous week's low, this would be a 2R trade. If you target 42,000, be a 3R trade. And even if you bought and saw this sooner, in the event that it did gap lower, your risk reward would just be greatly increased. Let's zoom into the daily time frame on the right hand side. Yeah, there is some bearish momentum. I could definitely see it gapping lower on the open, but where price currently is, it could potentially hold and form bullish structure based on how we closed here. We got this bullish candle, and then we got this next bearish candle, but it didn't engulf the previous bullish candle, and we could see some rejection as well, indicating that buyers are stepping in. If we go even lower to the 1 hour time frame, you can see that there might be a lower time frame structure shift, and this might be what happens next, just this next leg up. But we'll have to wait and see what happens in the market open. That's going to be key to this particular setup. Next pair, we'll be looking at the S&P 500. Now, I know a lot of these indices look exactly the same. Well, that's because they all have moved exactly the same. As we can see, stuck in our range. Previous setup still would be in a little bit of drawdown, had a little profit, still ranging. This area needs to hold in order for price to be able to move up higher to the 5,500 price range and then up to the 5,700 price range. This area of resistance, both these areas of resistance. So the potential setup that we're seeing here is this here. Same thing as with the US 30. There's liquidity on this left-hand side where these wicks are. So let's go ahead and draw this. Price could gap lower, drive down to that area, and maybe even lower than that, if that is what happens, and then start trending higher. In the event that this area holds, where support currently is at the 5,250, 5,300 range, then this would be our current setup. Stop loss below this wick here. Next candle potentially prints with strong bullish volume, given that we're seeing this price action here, came down, rejected, with major wick rejection, closed bullish. Next candle came down, rejected. So buyers are definitely stepping in, and if you look at the lower time frame, you can start seeing it start to shift, or you can see it start to shift. So this area could potentially open bullish and just keep trending higher, similar with the US 30 and the NASDAQ 100. All three indices, ultimately, I see going higher this week with a potential gap down lower at market open. Last but not least, we'll be looking at Bitcoin here. So here we are. Last week I had mentioned that I believe this was the monthly low. Last week I had mentioned I believe this was the yearly low. And so far we are playing out exactly according to that. As we can see, we had a strong bullish candle react from this point last week, right below 75,000, and ultimately climb higher. for this past week, we can see that we've been in a little bit of a range trying to decide what's going to happen. So if we zoom into the daily time frame, we can see buyers is definitely stepping in. We're getting the confirmation that we need, especially off that major area of previous resistance, now support near the 75,000 point. We see the wick rejection and the ultimate. We see the wick rejection and the candle pattern behavior. We see the wick rejection as well as the market behavior and as well as the candle patterns we need to see for a bullish transition from a bearish market back to a bullish market. We can see that price on the daily time frame in a little bit of a range here for this week, which is why that weekly candle was so small. Our current weekly bullish candle was so small. On the right hand side, we'll go into the weekly time frame. See, it's looking like this because of this consolidation. This is all we did this week. We just moved sideways, it's real choppy, trying to decide what's going to happen next. It looks like liquidity and volume is starting to build, and the next move is going to be targeting first 88,000, but I believe we should be able to break above, and 95,000 to 100,000 be in the works next if we can break above 88K. A break above 88K should be strong bullish volume, and we could easily see 95 to 100,000 next. It's just a clear range up to those points after that. Ultimately, this is going to be an exciting week. We have lots of great opportunities on gold, silver, the US indices, and Bitcoin here, especially for long-term holders. If you've been dollar cost averaging and buying every week and buying at some of these lows, then just keep holding. It's going to play out and you're going to reap the benefits of making a smart investment decision. Appreciate the support, BAT fam. Go ahead and like and subscribe if you haven't already. Go ahead and join my free Telegram channel. Link is in the video description. This week we'll be definitely sending quite a few signals here. Go ahead and follow me on Instagram, X, TikTok. Make sure you're choosing the right profiles though. I have them in the video description as well. There are people out there that do try to impersonate me, so please don't fall for them. Lastly, if you're looking for more free educational resources, go ahead and check out this channel in the video description. He is one of my friends. His name is Strong Money Forex, and he's been around just as long as I have, and very reputable, and definitely can have a lot to offer, and you can learn from him as well. So go check it out. Thank you for watching, and I'll see you guys next week. Stay tuned for more videos, and hope you have a great trading week. Peace.
Wake up, hit the gym, gotta train like Batman. Push-ups in the Bat Cave, lifting like a madman.